You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is time to rock out, talk some futures options. Yes, it is time once again for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks are binging. Reminding you at the top of the show, make sure you subscribe to the full network. If you're not, you're missing out on shows like the Futures Rundown, which is very much the sister program to this one. So check out that as well as everything else that's hitting the network, of course. And if you're ready to take the plunge to the dark side, theoptionsinsider.com/pro is the place to go. Special bonus for those folks out there today. They get to kind of drive the ship on the show today and determine where we're going as we head right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, to the Movers and Shakers we go. Remember, you can see this report, this chart for yourselves if you head on over to @options on Twitter. We do put it out right before showtime, so you could see for yourself exactly what we're talking about here. And if you looked at the chart in aggregate, you would see we are mostly biased towards the green with one big banger mover. Can you guess the biggest percentage mover for the week is, listeners? It is to the upside this week. I'll give you a hint. I'll let you ruminate on that for a little bit. I'd say we're hanging out roughly 70-30 green over red on the screen this week. But let's dive into the moving and shaking, shall we? As we keep on rolling. It cost you 4.13% to break into the top five to the upside and 4.07% to break into it to the downside. So bit of a banger week in both directions, percentage-wise at least. Let's go to the light side first. Number 5 is copper, so we're kicking things off in the metals, but we're getting base this time. I haven't talked base in a little bit. again, up 4.13%. It was number 3 in the same direction last week, up 3.68%. So you could see a wilder week this week. It's up a larger percent, and yet it is lower on our top 5 this week than it was last week at number 3. So interesting stuff out there. Number 4. I think this was my answer on the futures rundown recently about products that befuddle me. It's lumber, up over 4.25% again this week, 4.28%. Yet I know if I go pull up the numbers, there's going to be little to no options volume whatsoever on this product. So underlying movement volatility, not a problem in this case. And yet, for whatever reason, we can't really get the options jump started out here. Number 3, we're going to the healthcare sector of the S&P. Good week for them. Shut down. What shut down? Up 6.44%. Number 2, banger week out here for our old pal BTC. Up a little over 10, about 10.1% out there this week. So a nice little climb out here. Bitcoin was hanging out a little bit shy of 110 about a week ago, now hanging out just a little bit shy of 120 out there. So a nice little run out there for Bitcoin this week. Of course, we got some good news, I should say, on the ETH ETF front this week. So that's something a lot of folks have been waiting for as we keep on rolling to the number 1 light side mover, also our largest percentage mover. Did you guess it, listeners? Yes, nat gas up 19.1%. As we've discussed with Carly and others on the show in the past, sometimes those numbers can be gamed a little bit by when we're rolling contracts and everything else. But this week, a 19.1% to the upside for nat gas, listeners. So a bit of a banger. I have a feeling we might want to take a little bit of a sojourn over there. But before I get there and before I go see what our chat is choosing for today, to the dark side we go, listeners. Number 5 to the dark side, kicking it off in the ags. It is oats, off 4.07%. It was number 3 in the same direction last week, off 2.64%. So a rough couple of weeks for oats. Same deal for our old pal WTI, coming in at number 4, off nearly 7%, 6.7%. So a rough time. In fact, the entirety of the rest of our dark side is energy. So once again, a wild one. We got nat gas, kind of the lone energy name that's bucking the trend to the upside while the rest of the complex is getting annihilated. Number 4, WTI, off 6.7%. Number 3, heating oil, off 7.44%. It was number 4 in the other direction last week, up 3.26%. Number 2, it's good old Brent, off 7.52%. And the number 1 dark side mover, RBOB. What the heck is RBOB anyway? You might be asking if you listen to our futures rundown show. It's in the intro. RBOB off 7.73%, listeners. So a lot of energy. I got a feeling we might be hanging out there, but again, I have to go look at the votes. But before we get there, let's go out to the land of CVOL. Let's see what secrets it has in store for us this week. Remember, listeners, you can run this report for yourselves. Man, we are so giving with the data on this show, listeners. We really do like you. CMEgroup.com is the place to go. Or just type CME and CVOL into any browser you're rocking out there, and that will get you to the CVOL dashboard. You're going to set it to 1 week on the high-low range. You're going to go to the aggregates tab if you want to follow along with us. If you want to do a deep dive into any of your own complexes, hey, go for it. That's what it's there for, listeners. But we're going to kick things off in the aggregates, and we're going to kick it off in energy, because why not? Energy vol popping this week. 52.01 was the high. It set that pretty much earlier today. Coming in right now, it's 51.64, up about 2 points just today. The low, 49.65. So energy vol getting a little bit spicier this week. As we could see, a lot of moving and shaking in the energy complex in both directions. So a lot of that attributing to this added degree of spice out there in energy CVOL. Right below it, we have the aggregate commodity CVOL, 34.08, up 0.88 just today, so getting a little bit of a bump today. The high 34.28, again, hit that earlier this morning, the low 33.19. So pretty much energy and commodities both pretty much pinning the needle for the week right now, if they have come off a little bit off their highs today. And then below we have the ag products CVOL, 18.03 right now, up about 0.57 today. The high 18.82, the low 17.46. So the ag CVOL kind of splitting the uprights right now. And then we're starting to trend a little bit more to the dark side here with the FX CVOL, 7.21, off 0.17 today. The range for the week, 7.12 to the downside, 7.41 to the upside. So tilting towards the lower end of its range, but it is FX after all. As we keep on rolling to the Treasury complex, Treasury price vol first. The more important, dare I say it, of the two, is the actual underlying price volatility for that asset. It's about 4.5 right now, off about 1/4 of a point just today. So it's a big move when you're starting at a baseline of sub 5, listeners. That is the low for the week, the high 4.77. So Treasury price vol pinning the needle to the downside for the week. Metals going in the other direction. Metals 20.6, off about 1/4 today, but just coming right off their high of 21 they set pretty much yesterday. The low 19.8 earlier this week. So metals, for the most part, pretty close to the upper portion of their weekly vol range. And then Treasury yield vol going in the other direction, 87.25 right now, off about 4.1 points just today. That is the low for the week, the high 91.79. So a variety of different tales unfolding here in the C-vol report this week. Some getting a little bit of a bid, tilting towards the upper end of their weekly range, others hanging out in the middle, and still others pinning the needle to the downside. But now it's time for us listeners to go explore what you folks have on the brain here in our pro member. The optionsinsider.com/pro is the place to go if you want to play along and help determine where the show goes. And looks like I'm seeing a bunch of votes for Nat Gas here. I kind of expected that. So I think we're going to kick things off in the energy complex first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let's dive into energy. CMEgroup.com/TWIFO is the place to go to get access to all these reports completely for free because we like you folks. Once you're in that drop down, you're going to go down 3 slots to energy. Then in product family, 3 more slots to nat gas. You're going to skip past crude oil. I think we'll come back to that in a little bit, but not right now. Where we get to nat gas with that front future hanging out at $3.44, which is wild. We were just talking about this with our good buddy Dan the Man on the show last week, hanging out right around 3.25. We were talking about the 2 3/4 puts trading for a nominal amount. I think it was 6 cents. And we were joking about how that might be a flyer, may not, depending on if Dan's prognostication of potentially selling off to about 290 held sway out there. I know some folks in our chat, I think it was Age, who I'm happy to say, did take to the woodshed in fantasy this week. So I'll have to go see who I'm playing this week. But always happy to beat our pro members in fantasy. It's another benefit of being in the pro. You get to get knocked down a peg by the mighty Options Insider squad. I say, who knows? I have no idea who I'm playing this week, so we'll see. And who knows how many of my guys are out or on injured reserve, or what QBs will be throwing to them. It is a bit of a crapshoot on the season this year. But so far, the Options Insider squad 3-1. If you want a chance to dethrone me, listeners, head on over to the pro. That's the place to go. But yes, we were talking about in our chat last week. Some folks were a little bit bullish on nat gas. They were maybe thinking about selling those puts if they were a little bit juicier, and also maybe getting along some nat gas futures. And that looks like that was the play, listeners. Again, nat gas rallying 7.3% just since Monday. You go all the way back to the end of our show. Last week, it's rallied even more. So a wild week out here for nat gas. Wild on the volume front as well. 783,000 contracts already on the tape. It's been a little while since we've seen nat gas this spicy on the volume front. It's good to see. It's kind of like old times, listeners. And let's go out to the November contract, where we see over 2/3 of the volume this week, 67.4%. So absolutely all the paper going up out there this week, which is kind of interesting. Haven't seen nat gas that concentrated in a while as well. That future also 344, listeners. The vol out there, 56.62, up about 3/4 of a point. So contributing to that little bit of inflation we're seeing on the C-vol in energy. Skew-wise, kind of interesting as well. All the juice we saw last week kind of evaporating. The calls were 2.8% bid. They are literally 0.0 right now. So they are literally flat. So there is no juice or discount at all to the call wing right now, which is kind of fascinating. The puts last week, 0.9% cheap. This week, swinging the other way, 0.9% bid. So slight bid to the puts, nothing to the calls. Does that show we're kind of running out of steam up here a little bit? or just options market pausing to catch its breath. Could be a little bit of column A and a little bit of column B. If we go a little bit farther out, if we go to Dees listeners, those calls were 6.4% bid last week. Now they've dropped to 4.4% bid, and the puts are discounted. So there's still a bid to the calls there. If we go out to Jan of next year, so kind of the depths of winter, where the seasonality is strongest in nat gas, then we see it was a 12.4% bid last week. That is down to 11.2%, but still a very hefty bid. The vol out there also a 61.25, up nearly a full point. So again, attributing to this general increase we're seeing in the energy C-ball right now. But what is the hot option out there on a very hot week in nat gas, listeners? If you said the 3 puts in November, you are the winner chicken dinner. Man, a lot of paper going up in these. 91,000 of these bad boys have changed hands already this week. My goodness, that is hot. That is probably more than silver has put up this week, and a lot more than a lot of other complexes in aggregate we might be talking about just in these 3 puts. So very hot out here. Yesterday and today especially, 36,000 yesterday, mostly opening there. 31,000 today against an OI of 50,000. So it's anyone's guess whether they're closing or opening on these bad boys. 15,000 on Tuesday, mostly opening, and 8,800 on Monday, slightly closing there. So some folks bailing out there on the 3 puts on Monday. Let's just see if I could pull up really quickly, see what these are trading for. If you're wondering, listeners, 3 puts going today about 4 cents. So again, they're nearly half a buck out of the money. They've got some time to go though, so that might make a little bit more attractive to you. 26 days to go, but about 4 cents for these puts is where they're trading today. Obviously trading a little bit more than that earlier this week, but interesting stuff. And then if that's not doing it for you, our old friend coming back, the 2 3/4 puts. These are the ones that were lighting it up last week, I do believe. They were in November, trading 70,000 times this week. Almost identical OI, 50,000 and change pretty much for each. That is kind of interesting, even though they're not going up. Well, there could be some roll or vertical action here. Not today. It's 31,000 of the 3 puts against 13,000 of the 2 3/4 puts, unless they're doing a size ratio. I don't think that's the case. Wednesday, though, maybe a different argument. 25,000 of the 2 3/4 puts, 36,000, like we said, of the 3 puts. Then again, it was opening on both, though, so that kind of rules out a vertical or a roll there. Well, they could be putting on a vertical, I suppose, but you're going to be putting on a 2 3/4, 3 vertical on Wednesday. Probably not. I mean, what are those 2 3/4 puts going for now? Not much, but I suppose we've seen weirder things. Maybe Tuesday we had some roll action. 13,000 of the 2 3/4 puts going up against about 15,000 of the 3s. So maybe I could see a bit of an argument for rolling up to the 3s then. And then 18,000 of the 2 3/4 puts going up on Monday, also opening there. So a lot of opening paper on these 2 3/4 puts throughout the week, which again is kind of wild. These are going for about a penny, listeners. So if you thought it was cheap last week, around 6 cents to roll the bones, now they're down to a penny. So you're probably better off rolling the bones on the 3 puts if you're going for anything there, listeners. A little bit more meat on the bone there. But either way, a lot of puts lighting it up. If you want some calls, though, they can be found again in November. It's the 4 calls. So 4. When's the last time you kissed a 4 handle in nat gas? I'll have to go dig in. It's been a little bit. The 4 calls going up nearly 50,000 times this week. 48,300 to be precise. The hot day is actually today. 15,845 have gone up today against an OI of about 30,000. If you're wondering what's a 4 call going for with about 26 days to go, it's a whopping 7 cents. So I guess if you wanted to get wild, you could buy that 4-3 strangle in nat gas for a dime. That's a pretty far out of the money strangle, but hey, we've seen wilder things. Or if you're a really daring soul, you could sell it. I wouldn't really, not for a dime, I wouldn't really. We got to buy something else against it, obviously, especially to the upside. But wild stuff out here. You like that strangle for a dime, listeners? Is that just nonsense money? Probably is, but interesting stuff nonetheless. And that's what's lighting it up out here in nat gas. 4 calls, 3 puts, and 2 3/4 puts. You gotta drop down a little bit to find more relevant. Here's the 3 half calls, only going up 26,000 times this week. I say only, but that is a far more relevant strike. The big day for those was Looks like yesterday, 8,400 of those going up, mostly opening. Today, about 4,800 against an OI of 38,000. So there's some size open there. Those are going for about 21 cents. So again, 3 halves, 21 cents. That's not nothing. Stock has to run pretty much a 3 3/4 for those bad boys to pay off. So can we get there in 26 days for nat gas, or is this recent move just a head fake and then we're heading right back down out there, listeners? What do you folks think? This is a wild little run here in nat gas. I'm still amazed there's as many 2 3/4 puts trading as they are. If you like those, it's a fire sale on those now. You get all you want for about a penny, listeners. Again, probably 3 puts you better do for 3 cents, but those are also a pretty long way out of the money. Again, anything could happen. 26 days, listeners, but wild stuff out there. Speaking of wild stuff, let's shift gears in energy. I saw a bunch of votes coming in for WTI as well. So let's head out there. We were just talking about this yesterday on the futures rundown with Murad from EdgeClear. And we talked yesterday about how it was a surprisingly hot week already just through Wednesday. Already 450,000 contracts on the tape as of yesterday in WTI, which is about a week's worth of volume already. Today we're up to 600,000 now in the week, 606. WTI continuing to sell off 5 1/4 points to about 60.5 in that front future. That's just this week, off 8% just this week. If you go back to the end of our show last week, it's off about 6.7%. Either way, a rough week out here. We were talking about it on Futures Rundown yesterday. Whenever OPEC's dialing up the spigot a little bit, it's going to hit crude, of course, and that is the case right now. For a while, a long time, it seemed like 65 was that magical level, that pivotal level that everyone was kind of keying off of. Can we break below it? If we do, is it just look out below out there? Obviously, we are well below that 65 strike right now. In fact, yesterday on the Futures Rundown, Murad was talking about he sees the next support potentially around 58, which again sounds low when you say it out loud, but we are within spitting distance of that now. And of course, if we break through that, potentially look out below there, listeners. So of that 600,000 contracts, looks like the lion's share, about 40%, going up once again in the November contract. 14 days to go in WTI. What is the vol right now in Nove WTI? It's about 33 1/3, up about 1 2/3 points on the week. So again, contributing to that inflation we're seeing in the energy C-vol there, listeners. Let's go out to the Skew, though. That's kind of interesting. Last week, the puts were bid, about 3% bid. The calls, nobody wanted them. They were about 0.4% cheap, so pretty much flat. This week, that has swung. The puts are flat, and the calls are nearly 7% bid, 6.6% bid. So is that telling you think maybe the options market is looking for a little bit of a rebound here? Or again, are we just maybe a bit exhausted to the downside here? Kind of interesting to see nothing at all going on with the put wing and a bit of a bid creeping in for the call wing. This might also explain some of the paper we're seeing out here. Looks like the 75 calls were the big dog out here in WTI this week, listeners. Not trading a ton today, only about 453 today, but on the week about nearly 19,000, 18,600 going up out there in these 75 calls in WTI, listeners. The big day for these was Tuesday. Obviously, whenever you're seeing OPEC days, that's going to be the big event risk, going to be the big driver of flow out there. Tuesday, 13,000 of these 75s going up. Opening paper, 75 in 14 days. That is a wild strike out here. Listen, I did not have that in my bingo card, which again is why we crunch the numbers out here, listeners. And then 3,300 on Monday also opening. So some folks obviously positioning heading into the big announcement. 1,700 yesterday, only about 453 today. By the way, let's go back and look really quickly, see what these were trading for on the big day, which was Tuesday. These 75s, again, they can't be that much. It's a 75 strike. And on Tuesday, they were going for 11 cents on the day they put up 13,000 contracts, listeners. So, that's, 75? What are we talking about here? We need another dust up in the Middle East or something else along those lines. Some major impact to shipping or production or something to drive us back to the 75 strike. Are they harvesting the hell out of these listeners to get the 11 cents. Is that worth it for 11 cents? You could sell those listeners and buy the Nat Gas Strangle. There you go. And have a whole bunch of nothing to show for it in a couple of weeks, probably. But wow, a wild stuff out there. We're also seeing right behind it these 65s. So maybe that makes a little bit more sense to you. They went up about 18,100 times. So pretty much neck and neck with the 75s. Weirdly enough, the 65s, the big day is today. So not seeing them roll action, really. They're kind of just trading on their own here. About 4,500, I should say, going up today. And let's see, the 65s price-wise, these are going up for about 50 cents. So up to you whether you think that's a good do or not. We're obviously hanging out well shy of that. But 65 by just 2 weeks in WTI. Can we get back to that level again? I ask you, what is the catalyst that's going to cause that rally? They're either way. 65 calls, lighting it up, like we said. 50 cents pretty much today. Is that worth it? Or would you be sold to you, listeners? 6,000 almost going up on Wednesday, mostly opening. 6,400 on Monday, only about 1,300 on Tuesday. So again, not rolling paper, it's just kind of active paper out there, which is kind of interesting. If you want some more puts, also the 62 puts going up about 12,000 times this week, also in November. The hot day for those, Wednesday, 5,200, and then about 22 to 2,300 every day the rest of the week. Mostly opening. The OI on that strike's only 10,000. By the way, the OI on the 65s, 13,000. OI on the 75s, 21,000. And the OI on the 60 puts right now, 24, almost 25,000. If you're wondering, 62 puts, obviously a little bit meatier, trading $2.10 right now. So a lot of interesting stuff afoot out here in the energy complex. But you know what? We can't hang out here, listeners. We've got more votes coming in for you folks, and looks like the next one up on the docket for you folks is gold. So to the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners. Everyone's all the buzz, all a Twitter about gold these days. It is indeed one half of our question of the week right now, which we'll get to in a second. But gold, again, new all-time highs almost every day these days, if not multiple set intraday. I think we're north of 40 new all-time highs that we've set this year so far. So kind of setting records across the board. Gold coming in to start the show of right around 38 3/4. Up about 62 handles just this week, or about 1 2/3%. Of course, if you go back to the end of our show last week, gold actually up about 2.8%. So just outside of our top 5 for the movers and shakers this week. So again, wild stuff. We'll get into some of the debate raging about gold in a second right now. But was it a hot week for gold options? I think you could probably reasonably guess that it was. And that was the case. It was a banger week out there. Usually gold 2.25, maybe 250 on a regular week. If things get spicy, maybe 300, maybe 350. 463,000 contracts on the tape in gold this week. So gold, just an absolute banger this week. Let's get out there and see what is lighting up the tape, shall we, listeners? Gold, it's all D's all the time, which is kind of what we expect, and also looks like mostly upside, which again, new all-time high is kind of hard to argue with that. So those are kind of the two things we come to expect in precious metals these days. Longer-term upside, kind of the name of the game out there. So going out to decent gold right now, it's at 53 days to go. Putting up about 31% of the paper, so nearly a third of the flow going up in Dece this week, listeners. What is the vol right now? It is about 16.25, coming in about 1.1 points, which again is kind of interesting. Also plays into kind of what we're seeing in metals. Well, a little bit. Metals aggregate is up on the week, but we did see it coming in today. In fact, 2 days this week, the aggregate metals C-vol has come in the last 2 days of the week here. A lot of that probably driven by gold, but Kind of interesting, the vol action that we're seeing out here in the metals complex. Net, it is up on the week, even if gold, the big dog, taking a bit of a breather these last few sessions. And if you said, you know what, well, before we get to the option, I'll let you guess a little bit longer. Let's go out to the skew. You know the calls are bid. It's just a question of how much. And also, how much is the skew playing into this right now? Remember, if you keep hitting new all-time highs, it's going to keep rotating that skew, maybe a little bit of exhaustion percolating in there as well. So all that could be combining to what we're seeing out there right now. But still is a decent little bid for the calls. The calls were 3.4% bid last week in December. This week, 4.8% bid. So that call wing creeping up a little bit. The puts, 2.2% bid last week. This week, 5.1% bid. So looking at this skew, it's kind of your old school metal skew. About 5% bid to the calls, about 5% discount to the puts. It's kind of modest, but it's not going away by any means. So it looks like we're still looking and pricing in some upside movement. Can you blame them, given all the price action we've seen out there? If we go out to early to middle of next year, we see the bid, but it's not quite as pronounced. Usually we see that bid, maybe 11, maybe 12% bid to the at-the-money vol. If we go out to next year, it looks like it's hanging out around a 7.5% bid in most of those early to mid months of next year. So it's clearly still bid, but not quite as juicy as it has been. And again, it's had a hell of a run, so not exactly surprising out there. Let's get out to the par calls. That is where the action is this week. Par calls, take your pick. In December, putting up 12,400. In November, putting up 11,900. So kind of neck and neck out here, listeners, which is kind of interesting. We're going to go out to December 1st because they are the big dog out there. Again, putting up about 12,400. Looks like folks were bailing on these most of the week, even though today is the big day. 3,700 of these bad boys going up today, listeners. That's against an OI of about 11,400. 3,400 yesterday, 3,000 on Tuesday, 2,200 on Monday. Looks like folks were closing pretty much every day this week, which is kind of fascinating. If you're wondering what's a Dees 4,000 call going for, $53.50. So I could see an argument if you had these in your back pocket for taking them off right now. They're looking pretty good. $53 for the 4,000 calls. Again, they have 53 days to go. I mean, 50 days in gold, it's an eternity. New all-time highs almost every day. We could easily hit that 4,000 strike, or you could decide to get the heck out of Dodge. If past is prologue, folks are bailing on these. They were probably long them to begin with. Not a ton of sellers to the upside in the metals. So interesting that maybe some folks taking some profits. Again, hard to blame them. We also have some action on the 4,100s this week. Not quite as much, 8,500. So it's not quite roll territory or vertical territory, even though it looks like maybe Monday there was some similar size paper. 2,600 of the 41s going up, opening against 2,200 of the 4,000s closing. So maybe some roll action there. In which case, would you be rolling to those, listeners? Looks like that roll is trading for about $30 almost exactly. So would you sell out your pars for about $100 and buy the 4,100s for about $70? Looks like somebody might have been doing that on Monday. Is now the time to roll to the 4,100s? Kind of interesting that we're doing that whole roll just for $30. Let's see. Tuesday looks like it was mostly closing on the 4,100s, 2,000 of those against 3,000 of the pars. No, it doesn't seem like similar roll paper on Wednesday. Only about 1,800 of the 4,100s going up on Wednesday, and about 2,100 today against 3,700 of the 4,000. So could have had some light roll in action going up, but it looks like for the most part, not the case. It did go up as a call spread as well, so a little bit shy of $30, $25. That's kind of interesting. So they got a bit of a raw deal if they sold it. I'd want the full $30, but if they bought it, maybe they got a bit of a deal. So maybe you like that vertical better, $25 for that $100 vertical. I mean, 4,000 sounds wild in gold, but then we look at these moves we're seeing here, listeners, and not that wild at all. From just a new all-time high every day. Worth noting, the 3,700s in Dees also trading about 7,000 times this week. 3,700 puts, I should say. Again, so there is some put action, but not much. 2,300 today against an OI of only 3,100. So it looks like maybe some folks are getting the hell out of Dodge on these puts for most of the week. Let's go back to November really quickly as well, because they went up about 12,000 times as well. The Nov pars, listeners. So interesting stuff out here as well. The Nov pars, again, about almost 12,000 times this week. The big day was actually Monday and Tuesday, pretty much neck and neck. 3,500 on Monday, opening there. 3,300 on Tuesday. 2,500 yesterday. 2,500 again today against an OI of 5,100. So, folks, slinging some 4,000, some pars to open all week this week, which again is kind of interesting. Now, November, this is maybe where it gets tricky. December, maybe I can see an argument. 50 odd days. November, is that too soon for you listeners to hit the par strike? Or is that pretty much the sweet spot for you folks out there? Let's look really quickly, see if I can find some prices for you folks. Like we got a call spread going up, 37.80, 38.30, 39.50, 4,000. So it looks like more of a condor going up 1,000 times. If you're wondering, that was trading $19.20, but that's not what we're looking for. We're looking for Nov pars straight up. They also traded 4,040 half vertical 500 times for about $8. That's also not what we're looking for. Can someone give me the prices for these just straight up, please? That would be so helpful. But again, 4,000s, listeners, by, here's the Jan 4,000s, the Jan pars, trading $101 right now. If you are, here we go, Nov pars, listeners, $27.30. Interesting. So Nov pars, $27.30. Dees pars, $53. Interesting stuff out there, listeners. Which of those, gun to your head, would you rather buy? Obviously, you're looking at pretty much a 2x pop for Dees, but you're getting pretty much twice the duration out there as well. So you could argue maybe you're getting your money's worth. But either way, 4,000, does that just seem astronomical to you to say out loud there, listeners? 4,000 in gold. I could see arguments for all of them. And if you're on either side, you're not insane. I could see arguments for both. Even if you are a gold bull, you can also argue a little bit of exhaustion. But speaking of gold, listeners, let's get out to what's going on out here this week, because gold is very much top of mind for obvious reasons. New all-time highs every day. And usually in an environment where gold is setting multiple new all-time highs each week, it's not usually a banger time for the rest of the economy. Gold is typically one of those inverse assets you put in your portfolio for the rainy day. It's the hard asset you want to have around when things are not going well in other aspects of your portfolio. Not normally the asset that you have that's moving in lockstep with the S&P or with crypto. In fact, that was Carly's argument a few weeks ago on the show. Gold is no longer a risk-off asset. It is very much a risk-on asset because it's moving in lockstep with these other risk-on assets. As is always the case with gold, that's how some folks got after her on Twitter for that. The gold bugs come out in force when you dare to question the upside in gold. But to Carly's credit, she held her own out there, as she always does. But that raised the question. New all-time highs almost every day in gold. New all-time highs almost every day in the S&P 500, which is kind of wild. And then our old pal VIX, which is the ostensible fear gauge out there, hanging out in the middle of the teens, which is kind of where it likes to hang out. And so if you just heard the new all-time highs in the equities every day, probably makes some sense that VIX is not doing much. But then you throw in that added data point of gold rocketing north this year, new all-time highs every day. One of those seems like an outlier, which raises the question this week, what is the better gauge? What is the more accurate indicator of the true market sentiment right now? Is it VIX, which is kind of languishing in the mid-teens, signaling a whole heck of a lot of nothing right now, even though we're in the midst of a government shutdown? Or is it gold saying, hey, maybe look out below. Maybe the sky is falling a little bit out here. I'll give you a couple of seconds to mull over your answer, listeners, before I reveal what our listeners are telling us right now. You guys can vote as well. At Options on Twitter is the place to go right now to make your voice heard, listeners. And right now, our audience overwhelmingly going towards gold, 61.5%, a 38.5% for VIX out there. You got about a day or so left. We'll reveal more about that on tomorrow's Volatility Views. Yet another reason why you should be subscribed to the full network, listeners. All right, that music means we've come to the end of another journey through the world of futures and options. If you want another deep dive into gold versus VIX and the vol they're in and what those products really mean, stay tuned to Vol Views tomorrow. Good buddy Dr. VIX coming hot off the heels of not one but two conferences this week where gold versus VIX was certainly a big talking point. So we'll get some latest research and developments on that front from him. Again, yet another reason why you should be listening to the full network. If you are listening to the full network, you'll be joining us a little bit after the close today for all things hot options report. So stay tuned for that. If you're hanging out in the pro chat, just hang out. We'll be back after the closing bell to break down the day's worth of action out there on day 2 of our government shutdown. And will it keep running? Will this persist? I guess we'll have to wait and see. Back again tomorrow, like I said, Vol Views, and of course, the old options oddities for all of our pro friends. Yet another reason why you should be checking out theoptionsinsider.com/pro. After that, of course, tomorrow and indeed today to wrap up the days for the Hot Options Report. And of course, if you want more free data in your life, cmegroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. These markets are kind of wild right now, listeners, so you owe it to yourselves to at least arm yourself with some free data. You can't beat the price. cmegroup.com/TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on TWIFO. Back again later today for the Hot Options Report. Then, of course, tomorrow, Vol Views, Oddities, Thor yet again. And we're back again next week with another great episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.